bear in mind, we have with corporates quite, let's say, lean investment focus. So it can be that it's a great product, a great company, but it's just not in the focus of our investments.
This is my favorite topic, the opportunities behind the crisis.
I mean, you will just get into a mess with your investors, etc. So IT talent in the meantime is more expensive in the Valley than it is even in Switzerland.
We hear about Zoom parties, so actually you can have a beer or coffee right now via Zoom.
Absolutely, yeah, sure.
Good day to everyone. This is Venture Investor Economic Forecast by InnMind, and today our guest is Lukas André, Managing Partner at Redstone Venture Capital, responsible for Switzerland. Hello, Lukas.
Hi everyone.
Thank you for spending your time with us today, being online from Zurich. And my first question is, how at Redstone Ventures you are considering the ongoing situation with the pandemic and global lockdown? Did it influence somehow your venture investment process?
Well, I mean, I think it affects everyone's life, including ours, and things have changed. However, not necessarily our investment activities. So we are continuing doing deals. We have done deals also in the past month. I think, of course, it became more difficult with less traveling, etc. And so far we have closed deals which have been arranged before the crisis, but it doesn't mean that we would shut down now our continued investment activities. Rather, I mean, we will continue to prepare deals, and obviously we want to see founders face to face before we invest. But I mean, it seems that this is doable in the meantime as well again. So yeah.
That was my other question. Is it necessary for you, or obligatory according to your model, to have a personal meeting with founders or not?
Yeah. I mean, we are. And I think this is something we are partially pioneering is how we work with data. So we do a lot of analysis of companies and markets using data analytics, but that doesn't mean that we don't want to see the founders, because at the end, I mean, as you know, as everybody knows, especially in the earlier stage venture capital, the biggest asset you invest in is the team. And I think you want to, even if we can do a lot by video call, I mean, at the end, we want to see each other face by face. You want to see that there is a match, that you can confirm the positive opinion you have on a team before you invest.
Mm-hmm. Redstone's venture capital is a pan-European venture capital firm, meaning that you invest all over Europe and Switzerland, obviously. Does it mean that every time you see an interesting investment opportunity, you travel to meet founders in that country?
At a certain point in time, yes, we want to see them. We do investments. Actually, we also did investments globally. I mean, in fact, the focus is in Europe and partially also in the DACH region. So yes, we want to see them at a certain point in time, but a lot of due diligence work is done already. Pre-crisis was done virtually. Yeah.
Can you please elaborate a little bit more on your investment focus and selection criteria?
Yeah, so I mean, we are a bit special situation because we don't run just one fund. What we are actually we call it venture capital as a service provider. So we support, advise, and manage multiple funds, being it classical venture capital funds or also corporate venture capital funds. So depending on the different funds, we have different investment focus. So we have most of it, or actually all of it, is in the digital tech space. So we have a focus on industrials, we have focus on proptech, on fintech. Retail tech is one of the areas we quite intensively look at. So we have quite a diverse focus of different interests. And also in terms of stages, so we have funds more focusing on seed and some which are more in the Series A, Series B type of range. Yeah. Yeah, so it's quite diverse. So it's quite a number of funds we are involved in. Yeah.
That is so cool that you touched this point yourself, because while preparing for the interview, I was reading your latest posts and information about Redstones, and have seen this abbreviation VCRs, which got my curiosity directly. So you mentioned that this actually means VCRs, that you manage multiple funds, but as far as I know, even one fund is quite resource intensive. I mean, it is quite expensive to organize a venture fund, investment fund in Europe. So does it mean that you create a lot of, or manage a lot of legal entities, or you do it somehow within one?
No, I mean, it's every fund is a different legal entity. It depends also. Sometimes it's a single LP fund where a corporate is the single LP, and we also have multiple corporate funds. Redstone is always the advisor to that fund. So the latest one, which is announced actually this week, is a joint venture with SBI Holdings from Japan, which is a pan-European fund investing in industrial in new industrial technology. So it's called Future Industry Ventures. Yeah.
Yeah, I've also seen the announcement of this new fund. So you are just starting fundraising for this fund, or it is already launched and right now you are seeking for?
We have done the first internal closing, but we are still in the fundraising process. Yeah, and target volume is about 200 million euro. Yeah.
200 million. So if among our viewers, there are people who would like to participate as LP in the new fund managed by Redstones, please contact them or contact us and we will introduce you, and you are welcome to invest your money. It is just a small advertisement, why not?
Yeah.
So Lukas, let's come closer to the deal sourcing and deal origination process, because during obviously before you participated in many offline events, in many competitions. Right now it's all gone, you are totally online. So how do you source for the new deals?
I mean, I mentioned before that we are quite a data-driven company, and we have also done deal sourcing before a lot with our own analytics platform. So we have a proprietary analytics platform helping us on deal sourcing, identifying deals, etc. So we source them from many different type of sources. We analyze them, we rate them, and we advise or give guidance to our analysts on where to have a focus and where to also contact proactively the companies which we feel are the most interesting one. So that part of our job hasn't changed at all, because that's what we have done in the past. We have not focused that much on events, so the rest is then more, let's say, inbound deal flow, like most of our investment colleagues know as well. So we maintain our network. That has become a bit more difficult. So meeting people for coffee has not been possible in the past week. It becomes a bit more possible in the future. So it's a bit more, let's say, it takes a bit more effort to keep your network running. But that's not only for us, that's for our peers as well. So if everybody brings the same effort in, then that works. That's going to work the same way for the future. And I would say we can maintain that for a couple of more months. Then obviously it would be interesting to also be able to have a beer or coffee with our colleagues to exchange. Yeah.
But did you hear about Zoom parties? So actually you can have a beer or coffee right now via Zoom.
Absolutely. Yeah, sure.
I guess that even this week in Zug there are few beer parties in Zoom.
Because of the Bitcoin halving event. Yeah, sure.
Yeah.
Yeah.
So Lukas, and while doing the due diligence, what is the most important for you in your scoring model? I mean, what is the basis, essential part of it?
Yeah. So it depends on which stage we are investing in, but if we do it automated, we're looking at a couple of factors, including like other investors, traction in the market, the traction of the market, background of the team, etc. if we do a due diligence, it's probably you get the same answer from every other investor. So then it's also, again, the team, which is very important, the USP, the technology, the underlying technology, and of course the traction they have with their product and service. Especially if you go post seed round, we want to see also, let's say, interesting KPIs, interesting market feedback of the product or the services the company delivers.
Yeah, but for A, B, and the further stages, it is quite obvious. But you also sometimes invest in the early stage, and it is stated in your website that you have early stage focus. So if the startup does not have this market traction yet on the MVP or pre-MVP stage, how do you track the traction? Sorry for tautology.
Yeah, I would say typically an MVP is required for us to invest. So we don't need the full, doesn't always need to be the full product, but we want to see an MVP. And even there, I mean, even if the traction is not on the top line, you should have KPIs which give you a feedback from at least some of the clients, some of your prospect clients, on how they look at it. So yes, we, in almost all cases, we want to see certain KPIs which we can which convince us, and on the other side, I mean, the more you focus on the team, the more you focus on the underlying assets, like the technology they have.
Mm-hmm. So for the MVP stage, when there are no yet sales, no yet customers, you track mostly the team progress because there is no other tracking.
Yeah, or then it might be too early for us. Yeah.
Okay. And speaking about team traction, do you require, or how do you look at the team experience for you? In particular, the previous failures are minus or plus because they have additional experience?
I would certainly say they are plus, because I mean, that's my personal opinion. I'm much more looking at people who have a certain industry track record. So obviously, it's always interesting to have fresh academia people with a bright mind and bright technology, but I very much favor if they team up with people who have seen many different things in industry, who have gone through difficult times, difficult situations, and can learn from that. Because if you make that learning every time or the first time in that venture, it's just going to be very, very expensive. And that's why I prefer to have teams where maybe a couple of the founders have done a startup in the past, or have run other operations which is relevant for the startup. That's for us quite important. So yes, I would, and that failures can be included. That's not a problem. Yeah.
Oh, I'm so glad that you mentioned this. I'm so glad that you came to us, especially because I think you are the first venture capital firm from Europe and focused on Europe. Previously, majority of investors in our interviews and videos were from Silicon Valley, Israeli, or other countries. And sometimes we have this, not arguments, but discussions, because investors from Silicon Valley, they compare European ventures with American ventures, and they say that Europe is much more conservative, and European VCs, that is the reason why European VCs don't gain such attraction, because they are very conservative. Do you agree with this?
Yes, but I would not agree when we talk about, let's say, the venture investment scene. I don't think you are active in venture capital anywhere in the world if you do not accept failure. I mean, there is this very important saying, and I think most of us live with it, saying, I mean, you can only pick winners if you also pick losers. So if you look at the return profile of venture capital, you see a lot which is going to be failure, but you're your rate of success or your return depends on how many winners you can identify and have in your portfolio. And that's something which, when we work with corporates, is quite a challenge to help them in this shift of mindset, because a typical manager in a corporate comes from a very different side. He comes from a world where focus matters. So you'd rather invest all your money on one single big project. So, and you want to have control over what you're doing. And as investors, venture capital, we do the opposite. So we don't want to have the control, because we believe the founders are the one which needs to run the company. Of course, we want to support them. We give them all we can give in terms of network, in terms of experience. But at the end, the one on the driver's seat should be the founders, and it's never good if an investor has to take over the steering wheel, because then something is quite wrong already. And the other one is especially to be able to diversify, to say, well, we don't do just one investment. We don't believe we are the one which can select the best winner. We need to go into a portfolio. And that's something very difficult for corporates to understand, because they come from a different world. And they believe, well, we know the industry, we know who to pick the best startup. And what I keep telling them is, well, there's a whole venture capital industry, and you will find no venture capitalist which says my portfolio consists of 3 companies and I know how to select them. So all of them go into a diversified portfolio, because we invest in uncertainty, we invest in risk, and we don't know from the very beginning who's going to be the winner and who's not. And so that's why I'm saying, in the industry itself, I don't think that they will find anyone who would say a failure is a real failure. Having said that, the society is different, and because the society is different, I think for certain it's more difficult for somebody to take the decision to become a founder, for instance, to say, well, I go into that risk, because it may not be accepted by his environment, that if he fails, that he keeps his status whatsoever. So from that perspective, completely agree, but I'm not sure that that's true for the venture capital industry.
Mm-hmm. That is good that you said and elaborated on that. Thank you, Lukas. Speaking about your fund activities, can you please tell a little bit more of what are your favorite sectors and fields which you invest in?
Yeah, sure. Again, I need to switch between the different funds that we are operating. But we have, for instance, VR Ventures, which is a fund which invests into fintech in particular, but also into proptech and construction tech. So one of our latest investment there was in Penta, for instance, B2B fintech. Banking, B2B banking platform.
Can we put after the interview on the description the links to these new investments? Okay, cool.
Sure. Mm-hmm. Sure. And another one is Planradar, which is a construction tech company. So there we have this focus on fintech, proptech, etc. We have one fund activity focusing on retail space, now especially out of Switzerland, where we invest into, let's say, new models for the retail sector, including the logistics, etc. I think that's quite an interesting field. Also one which, especially on the logistics side, we see now, a very much uplift or trend that last mile logistics problems have not been solved. There is still room for a lot of new models, not a lot of new business models, etc. So I think that's one sector which will certainly profit from the crisis. And we are also setting up right now activities in the area of health tech. Again, also an area which we believe is going to be quite in the trend in the coming month, because digital health, remote diagnostics, etc., is something that has become more and more important. And we have, as mentioned before, with future industry ventures activities in the industrial space, including AI, including IoT, big data, virtual reality, etc.
We make these videos in order to dilute geographical and administrative borders and to help you get closer to international investors, venture capitalists, market experts, and startup hubs, irrespective of what country or part of the world you are based in. And we need your support. If you like this video, please don't forget to put like button, to subscribe to our channel, and if you find it useful, I will appreciate if you share it with your teammates, co-founders, or social media networks. Thank you, and see you in the next videos.
So, looking at the list of sectors and segments you are investing in, I guess that your current portfolio was not so much hurt with the current lockdown, correct?
Yeah, I would say now the earlier the startups are, the less they have revenues which they can lose, right? That's one of the positive sides. I would say areas which may have become more difficult for startups and may also be in the future are especially companies, for instance, in the enterprise software sector, where already sales cycle have been quite long in the past. And we see some of the prospective clients being a bit more cautious right now. I hope that's going to be rather a short-term thing. But I mean, everybody is right now focusing, preserving cash, etc. So things which are a bit with longer sales cycle may become even more difficult in the near future. Travel tech, we are not much invested, but it's probably also something which is a bit difficult right now, and something which I think the venture industry in general may affect is that exits may also be something which takes quite some time to recover. That we see strong appetite from corporates to make acquisitions. Yeah.
Well, maybe you are right in general, but there are some exceptions. One of the speakers in our series just said that at the top of the crisis, in the middle of the crisis, he made the historical exit in his fund. So sometimes good things happen.
Yeah, I mean, that's what is certainly true, and is that when the venture capital industry itself is much longer cycles, right? It's less affected like to short-term impact like stock market, but we'll see how long. I would say the deals that have been closed now in the past couple of weeks, they have been arranged long before. So, but how strong is going to be the appetite in the coming months for corporates to make acquisitions is something to be still to be seen. The same with IPOs, right? It's not going to be the easiest time to do an IPO in the coming months. Is my assumption.
Yeah, that's true. Most probably, market did not feel the whole effect of the ongoing situation yet. Maybe we will feel it in a few months.
Yeah. On the other side, on the fundraising side, I'm a bit more relaxed because there has been so much money inflow into venture capital funds in the last 2 years. There's still a lot of dry powder available, assuming, of course, that the LPs which are in the funds are actually liquid and can meet up with the commitments they made. But assuming that most of the funds are stable in that respect, I do not see a liquidity crunch on that side. What we see is that, I mean, mentioned at the beginning of the interview that, I mean, because it's not possible to meet companies, new deals in this, but I expect this to be, let's say, a few months time where it's a bit more difficult to do new deals. And that's why most of the investors right now also try within their portfolio to make sure that they are securely financed until early next year, so that there is no short-term liquidity crunch in the startups. And then I think that part is going to be, I'm a bit more relaxed there.
Mhm. Did you add any new sectors after the lockdown, considering that there were sectors you didn't pay much attention to, but you understood that things will change?
One of them, and I mentioned it before, one of the areas where we have looked at in the past, but we have not, but let's say not with the strongest appetite, is the last mile logistics area. It's not a new, very easy area. It's also quite crowded with a couple of different models, etc. But that's certainly something that that came to our attention much more. Other than that, we're much more driven really by more stable investment strategy we have behind our funds. Yeah.
Mm-hmm. What about valuations, Lukas? Many people, they are worried that, or maybe happy that valuations will fall, and we will see the huge drop in valuations until the end of this year. Do you agree with that, and how do you consider that?
I would expect a certain cooling down, yes, but I also would say that's not to the worst. I mean, I think that the deals or the terms have been heating up quite a bit in the past year or two, and I think that's just healthy for the industry that it's a bit cooling down. And on the other side, as mentioned, there are so many funds which do have money. I mean, to all my colleagues I've spoken in the past, except from one fund which said, well, they're stopped investing for this year. With the exception of that one, everybody says they continue to invest. So, and as long as there is supply and a limited number of good companies, we will see also in the future, let's say, heavy discussions or negotiations about valuations still. Yeah.
Mm-hmm. So actually, for good deals, valuations probably will not change a lot, or maybe you will have some additional space for negotiation to get a better deal.
Exactly. So we'll see. But I don't. Certainly, I mean, it's not something that will now further inflate valuation, the situation. But it's hard to say at this stage how much they will drop. I still expect that good deals, and we all as everybody want to do good deals. I still expect some competition among investors, etc., to get in, and then still founders also be able to negotiate as well. So yeah.
Can you just briefly, if you don't mind, explain to our viewers, those who are young startups and did not have venture experience yet, why is it better to be overvaluated? Because many startup founders, they want to get as high valuation as possible in early rounds.
Yeah. I mean, this is something we look at very much, is not just, well, I mean, how much are you valued today, but what's the next round? What was the previous round? And I have seen quite a number of deals fail, not because we didn't agree on the valuation for this round, because the previous round's evaluation was a wrong one. And if you then come out with a super high valuation from the seed round, and the A round needs to be a flat or even down round, you get into this negative twist. And then sometimes we rather step out of the deals than to force into a down round. And I've seen deals failing because of that. So I think you should always think about, okay, what's where do I get with that money? What could be the next step? How much uplift is feasible in between? And if you come out with a too high post-money valuation from the seed round, that's just very difficult to then still attract attractive new A-round investors later. And I mean, it's like always, how big is your slice of the pie and how big is the pie in general? So I would advise every startup to much more focus about the quality of the investor and what he brings in terms of network, in terms of added value for the startup, versus trying to keep own slice as high as possible in that current round, because it might be that this new investor will help you to make the whole pie much bigger.
Oh, that is a very good advice. Thank you, because sometimes money is not everything, and the additional value investor can bring without money, but with network is much higher and more valuable. As far as sorry.
Yeah, and high value just raises expectation for everyone. And if you cannot meet that expectation later, I mean, you will just get into a mess with your investors, etc. So rather try to find a reasonable valuation for both sides. I'm switching to my discussions I always have with corporates, because if you talk to M&A people in corporates, they always want to strike the best deal with a startup, and I tell them, well, the difference is when you do an M&A, that's the end of the story, right? You buy somebody out and you take it over and you do it. While if investing into a startup is the beginning of the journey, so you start to work together, and you need to make sure that this is on a good basis and a good starting point for both sides. And if that's unbalanced on either side, I mean, you just have a bad start, yeah.
Very recently, we had an interview with the head of Impact Accelerator, who works a lot with corporates. And he stated that the biggest problem between corporates and startups is that they speak different languages, and corporates have no clue how to work with startups. Do you also notice that when you speak with your corporates?
I would say that's part of our role. That, I mean, we are also kind of a bit the quality stamp, that we help to structure a CVC unit, that it also works as a CVC unit and works as a VC and not just as somebody doing strategic deals. We always distinguish between strategic, which we believe is kind of linked to majority, to control, etc. We rather use the word strategic relevant, because that's something which implies, well, we invest because we have a connects to what the startup is doing, but it's not our intention to control them or to take them over. It's just to invest, to build a better fundament, and then something for which then can also help to do the collaboration together. I mean, you increase the patience and the willingness for understanding on both sides if you also join on the cap table.
Mm-hmm. Lukas, when we speak about smart money, and Redstone definitely can add additional value as, for example, network with corporates and a lot of other things, but you also advise your pipeline. I mean, you speak with them, you give them some hints, some maybe insights. What advice do you give to your portfolio companies during these lockdown times, how to overcome this crisis?
I mean, currently even more. I mean, it's important for every startup in every time, but now even more. Cash is king. So maintain your liquidity. Make sure you have a precise outlook on your liquidity. I think especially this short-term financings are just not possible at this time. So make sure you have a long-term horizon. You know how long your runway is, and you act early enough and accordingly. And as mentioned, I think many investors right now try to make sure that their startups are financed at least into sometime in 2021, to make sure they don't get into problems now in the second half of 2020. So I would say certainly liquidity is king, like for everybody. And on the other side, but that's not something you need to tell typically to founders and entrepreneurs, because that's in their DNA. Look for where your opportunity is during that crisis. I mean, how can you use your USP, your IP, whatsoever, also now in the context of the crisis, if there is a relevance or not. But that's typically not something you need to tell them. That's something they have in their DNA. Yeah.
Yeah, this is my favorite topic, the opportunities behind the crisis. And were some of your portfolio companies efficiently using these opportunities? How do you think?
Yes, absolutely. So let me see if I have an example. So we have companies in the It's a bit different. Well, it's not something. Yeah, it's not something I can talk about right now. But for instance, the retail tech, we have companies which are actively using it and can help here on the companies. Yeah.
And especially maybe retail sector now is also scared and they are looking for some solutions. Okay, I think I got you. But when you will be allowed to talk about that publicly, that would be great to have an additional piece of content about that. Lukas, a few more questions before we finish for today, because I remember you need to run. So first of all, on your opinion, difference between European startup market and USA startup market. So 3 main advantages of European startups. I wish I will do my best to show your interview to our VCs from Silicon Valley to demonstrate that European startups are really cool.
I would say what we have in Europe, we have a lot of very strong technology. We have close links to world-class universities, and we can quite use that technology to develop products. We all know commercialization is something which is then not always the strongest in Europe, but if you find the right entrepreneurs, I think that's absolutely a plus. Then I would also say, compared to the US, markets are not that overheated, so valuations are still reasonable. Also, the number of investors in which are in competition with you on good deals is probably a bit lower than in the US. And also the access to talent, even if it's difficult everywhere, it's difficult in Zurich, it's difficult in Berlin, but it's not the same like in the Valley. So you do get tech people and you can hire tech people, and they also may stay longer with your company than you, at least my experience is in
you mean loyalty?
Loyalty of employees is something which I would say is a benefit in Europe. Yeah.
And how about startup costs? What I mean here is that literally yesterday in the evening, I was on the webinar of 2 investors, one of them from Silicon Valley, and he shared his experience when he was seriously considering the startup from Switzerland. But then he learned that the startup who generated just a small number of revenue, just started generating revenue, the founder had the salary of 200,000 Swiss francs per year. And it was absolutely okay to raising the round in this environment. However, for the Bay investor, it was something ridiculous. He thought that founders should maybe cut his salary and invest this part to the product or marketing.
Yeah, I mean, now looking at founders, I mean, I would not invest in a company where a founder takes a 200K salary. I mean, he is equity incentivized, so I mean he needs to have quite he does need to have a salary, and the salary in Switzerland is of course higher than in other countries, but still, I mean that doesn't work. He cannot expect to get fully market salary when he is also fully the key equity holder in the company. On the other side, I mean, if you look at employees, and especially in the tech side, I would say, and that's from my, I would not say I have the full overview, but I would say here, I mean, IT talent in the meantime is more expensive in the Valley than it is even in Switzerland. So in terms of employees, I would say the startup costs in the US are higher, and that's why also an average A round, B round, etc. is much higher in the US than it is in Europe. And then if you go to Berlin, of course, it looks even much different, because there the salaries are much lower compared to Switzerland, as we all know.
Yeah, sounds quite reasonable. Lukas, the last question for today. For those entrepreneurs who will be watching this video, your interview, what should they do to attract your attention to pitch you and to excite you so much that you will start due diligence and seriously considering investment. So what should they keep in mind before pitching to Redstone Venture Capital?
I mean, they need to have a great product. They need to be able to present that great product and be convincing entrepreneurs. The more they have good traction with what they are doing, the better they can attract our interest. I mean, we are looking at every pitch deck that arrives in our inbox. We look at them. We have also policies to be able to give very short-term also feedback to say, well, it is of interest or it's not. Bear in mind, we have with corporates quite, let's say, lean investment focus. So it can be that it's a great product, a great company, but it's just not in the focus of our investments or of our fund. But then we tell that to the entrepreneur also very early, because we don't want to drag dialogue for a long time if there is no interest. So that's so send us your pitch deck. You can do that online on our website, or you find also emails there, and we look at it and we'll give feedback. Yeah.
Awesome. So guys, if you listened attentively, just to summarize, send the pitch deck, prepare amazing, attractive presentation, and demonstrate your traction. This is the most important for Lukas and Redstone Ventures. Traction, even if you don't have the big sales yet, you can demonstrate traction with your team rates and a background, previous experience. Correct?
Absolutely. Yeah.
Thank you very much, Lukas, for your time, and I wish you great deals and great exits during this year despite all the crises. And I appreciate your advice to the founders and your transparent approach.
Thank you. Thank you for your time. Thank you for the interview, Nelly. Yep.
Thank you. Take care.
Bye.